talk about the big story of the week. It's Bitcoin rallying in a big way, leaving it just below the all-time highs. Kevin Kelly is the co-founder and CEO at Delphi Digital. Kevin, good to have you back on the show. So the first question here, obviously, that people were wondering is this different? Is it for real this time? Is this about believers coming around from institutions? Or is it just another big speculative run? What do you think, Kev?
Yeah, I mean, it's a great question, one we've been trying to grapple with for much of the last 3 or 4 weeks now. And I think it's important to put this in context. I want to take this in stages. The latest run up, right, we'll call it over the last 2 or 3 weeks, I think certainly has been much more kind of momentum and sentiment driven, right? As you've seen more headlines come out around not only prominent fund managers coming into this space and macro fund managers coming into this space, but corporate treasurers. You had the PayPal news right at the end of October that really helped set us up for a big month so far here in November. But if you look back, I mean, that March to August period, it seemed like Bitcoin was basically a high beta play on that one big macro trade, right? Which was weaker US dollar, lower real yields. You had this unprecedented monetary and fiscal policy combination. And so what's really interesting is now that we've got brighter news on the vaccine front, a bit of a reflation trade that people have been talking about, and growth expectations obviously picking up next year. The fact that Bitcoin has really outperformed while gold's been down, it's come back around with stocks and has really kind of taken off again in the last 2 or 3 weeks. I think, when we say this time is different, I certainly think that we are in a bit of a different environment in terms of the landscape, the investor landscape sitting beneath us and who's now investing in this, right? As I just mentioned, there's a lot of different players that are coming into this market. But at the same time, if we break above and reach a new all-time high, that's obviously a very significant turning point for Bitcoin. But I don't necessarily think, we know that things can't grow to the sky and it can't go parabolic forever. And so I think, we'll have a bit of a shakeout probably somewhere in the next couple of weeks here, maybe a bit of a pullback. But at the same time, I think the lower support base that Bitcoin's now going to form is going to be much higher than previously.
I want to take a look at this chart that you've got firstly that just kind of overlays the run we're in right now versus the 17 rally. What does this tell you, Kevin? Does it look fairly similar? Does it walk me through this right now? And I know this is normalized as of a certain date, but we've overlapped the current run. Just to be clear, right? That blue line is where we're at right now.
Yeah, exactly. So basically what this looks at is it normalizes back to Bitcoin's prior cycle high, right back in 2013. You had this, or excuse me, 2017. And so you had this really kind of lull. And so what we're seeing here is that, again, you had this parabolic move at the end of 2017. That's what that blue line shows there. You see that Bitcoin has certainly come back. And then now it's really kind of tracking in line with the prior cycle, which I found really interesting. Again, not a perfect one-for-one correlation, but basically says that, Bitcoin is tracking previous cycles.
So what's interesting about this is that if we continue along this path, then we would be getting to a really lofty level that's not, the chart where that would go is not the previous 20K high. That's some new high if it continues at this pace. So the rate of change right now is one that's not as exponential as it was in the big run up. That's important, right? That this has been more kind of a steady stair step. It's a steep stair set. Okay, this is the stairs, the climber at the gym, but it's not quite the big exponential move.
Yeah, no, I think it's a really good point. So one, again, certainly expected at some point we'll get, new all-time highs here with Bitcoin. I don't think, if you think about this in cycles, I don't think necessarily where Bitcoin peaks this cycle, the extent of that move on a percentage basis, to your point, I don't think it's going to be nearly as high, right? It probably won't be as extensive, but it certainly will be much higher than, let's say, the previous high of 20K. When you look at kind of more short-term price changes as well, and looking at that type of data, we saw in that leading up, the 30 days leading up to its peak in 2017, it increased over, I think it was 215% in a matter of just 30 trading days. Whereas now we're hovering much more around the 35 today with today's gains, probably right around 40%. So it isn't nearly as parabolic as the prior cycle, as you mentioned. Yeah, and you got the chart right there.
Here's the chart that shows that big percent move that puts us in perspective. If you were to just take out price from the conversation and look at that 30-day percent change, which is highlighted in the black shaded area there, it doesn't look like much exciting at all. And this kind of goes in line also with what we see from some of the realized volatility. Another chart you've got here we can run right after this one that shows it's pretty low. Do you think that is a draw right now? Is that also part of the reason maybe that more traditional style investors or RIAs might be willing to dabble a little bit?
Yeah, I think it's a really important question because, again, you have to kind of separate these different investor types that are coming in. And we've kind of been thinking about this on a kind of almost a Bitcoin investor progression curve, right? And what I mean by that is, obviously, you start off as a grassroots movement, then move to kind of your crypto-centric funds. And now you're starting to see the cusp of more kind of family offices or investors that have a bit of a looser mandate. But you're also starting to see interest from RIAs, FAs, the wealth management industry. And so what's interesting here is that, yes, the realized volatilities you're showing on this chart certainly isn't anywhere near the peaks that it was back when we had this parabolic run in the end of 2017. But I also think that volatility, again, works in both directions, right? If we want this higher kind of reward or potential benefit, and if we think that Bitcoin can certainly outperform in a dramatic fashion over the next, let's call it 2, 3, 5, 10 years, the volatility profile of it has to, by definition, be a bit higher, at least to the upside, for that to come to fruition, right? And so it's almost like wanting to have your cake and eat it too. You have to accept that you're going to have more drastic drawdowns, and there's going to be volatility on the downside as well. It's kind of evil twin. And so the volatility argument, long story short, is it depends on who you're talking to, right? Some of these macro funds are coming in because if it's a bit of a higher vol play, right, a higher beta play on something like gold. RIAs are a bit more hesitant or conservative because that's been one of their primary kind of drawbacks or reasons for their hesitancy has been because it's a higher, the volatility profile is higher than traditional assets.
So Kevin, 2 points here. We're going to extend this a little bit. Closing bell ends with stocks little changed on the day. So there's down about 0.5%. We're going to come back to that, guys. We're going to talk BTC here for a minute or two just because it's the really big story of the week. So 2 points there, Kev, as you mentioned. Just about anybody in this space, no matter how much they love Bitcoin or if they hate it, they all agree that you could lose a good bit quickly just based on the volatility of its history, right? Even in bull markets, it has big drawdowns. So the fact that people are taking more interest in this now from a traditional standpoint suggests that traditional investors overall are more comfortable taking risk. And that's where I think it's interesting to put this into context with the stock market. I see the NASDAQ hasn't moved in 3 months. S&P rallied all of 2% on news that we're going to get a vaccine. And I know you think about stocks as well, Kev, given your background in equities. And then you look also, you mentioned gold, just terrible right now, the chart. Bonds have been selling off for 3 months. Is it possible here that we're seeing big investors, traditional investors, just run out of ideas and take a chance on Bitcoin? Or do they really, really believe, Kevin, when you talk with these, because I know you do some of them at your guys' firm, do they really believe in what it is? Or are they saying, you know what, nothing else is working and I am out of ideas and my investors are used to getting 7 to 10% a year?
It's a really good point you bring up, and it's certainly a very interesting discussion point. I mean, from our standpoint, there's a bit of both, right? So there's some people who buy into the narrative, buy into the ethos of what Bitcoin stands for. And then there's other people, to your point, that are simply looking for, again, that best potential expected risk-adjusted return. And what I think is interesting about what you just brought up in terms of looking at other asset classes, right, is let's take treasuries, for example. The risk-return profile on treasuries right now, and we've been saying this for a long time, I think is much higher, right? So there's a much higher risk profile to treasuries given what you can earn on the yield and even price appreciation because treasuries are capped to a certain point. So when you look at something like Bitcoin, yes, you're willing to accept that higher volatility, which some people use as a gauge of risk because you think that upside actually could come to fruition and you can almost foresee where this can go. And that, I think, potential price appreciation is a massive factor when it comes to asset allocation because, again, to your point, where else are you going to put capital right now?
Kevin, one last thing real quick, and it's a very related point with gold again, because the way Bitcoin's broken away from risk assets the last couple months is one of the most compelling things for me to kind of turn from a Bitcoin cynic to a believer. The one, though, that I'm still having trouble with is when I look at gold, there's such overlap between what the Bitcoin bugs tell me and what the gold bugs tell me. It's just, I'm so shocked that gold's not getting anything. Has it really been that thrown to the side by the investing class in favor of Bitcoin? I mean, how do we explain this huge divergence if BTC is really moving on potential for dollar devaluation and inflation, these things? I mean, is gold, what does this mean for gold? Is it just donezo?
It's a great point. To be honest, I don't think that bifurcation can go on forever, right? I think, at least I sit in the camp that I expect long-term Bitcoin to trade much more in line with something like gold than, let's say, stocks or riskier assets. And the reason I bring that up is because I think, again, the investor base is different for both. And gold, if you look at it, right, has really trended in line with the pickup in real yields, whereas Bitcoin has basically ignored that and even ignored the volatility spike that we saw in the VIX right there at the end of October, because it was drowned out by this news of not only PayPal, but more importantly, corporate treasurers and other prominent macro investors coming into this market. So again, it's still a small asset class. The amount of capital it takes to move this asset is a lot smaller than the gold market. And so to your point, I don't think it goes on forever. Again, if the headwinds that are currently holding gold back remain in place and even accelerate heading into year end, that certainly could be, a potential key risk to Bitcoin.
Okay. All right. Kev, really good stuff. Good to catch up. Thanks for coming back on the show as always. Kevin Kelly, co-founder and CEO at Delphi Digital.